for the opportunity to speak to each and every one of you. Also, I want to say thank you so much for the leadership group. I know Buki reached out to me firstly, so that was really nice of her to do so. And also Abiola, I spoke very in detail with Abi, took the time to get to know me and putting this together. So I appreciate it. And Jumki, she's sending me all the details in the email. And Chris, thanks for taking the time to walk me through. And Osita, happy belated birthday. I hope you had a great time.
Thank you, man.
Folks, I mean, I'm so grateful for the lead. I'm so grateful for the leadership of NIPCA for being on this program and just promoting wellness, financial wellness of families to be able to be aware of all of these things that's happening today. So I'm grateful to be speaking to you, and I hope that the time with us this evening will be well worth it. An objective is to make sure that the way you started this evening, you're leaving a lot better than the way you started. So we want to make sure that you take a lot of information, get a lot of notes, and feel free to reach out back. I must tell you that the information you hear this evening, folks, I did not make this up. I'm just a messenger to share this information with you and be able to package it. So you're getting a perspective and a different way of how it's being presented to you. And everything that's being said here this evening, please advise your personal consultant that's providing all the financial knowledge to you and planning for yourself, as the information being shared here is for knowledge purposes. So again, I want to especially thank the Nigerian IT professionals in Canada for hosting me and inviting me here this evening. So friends, let's talk about what we're going to be sharing with you this evening. And we're going to have a lot of information we'll share with you this evening. And for most people, we take something away and we have a challenge in taking action in it. How can we adapt it to our life? So we want to show you the importance of making sure that you take those actions very soon and understand why is it that you actually pay taxes in Canada? Why is it so important? And then we'll talk about the sources of your income. How do you earn your income? Where does it come and what can you do for it? And then most importantly, we'll talk about different marginal tax rates that you can be involved in. And these are all information you can find in the Canada Revenue website and get more knowledge on there. And then we'll close it off with some estimated, some real life example, so everyone can at least take away something that they can adapt to their personal life. So let's look at it first, friends. You look at it today and you see, okay, we get to share some information. We're age 18 today, Chris. You see, you're 18 to 25, you're very, very young. And Osita is talking to you about saving money. And you're like, Osita, me invest? Are you kidding? I'm just getting my education. See, that happens. And, Chris, you goes on to be 25 to 35. And you tell Osita, you don't expect me to invest now, do you? Remember, I've only been working a few years. Things will be looking up soon. And then I'll be able to invest. Right now, I have to dress well in order to make a good impression. Wait till I'm a little older. There's plenty of time. And then you meet Osita back at 35 and like, how is it going, Chris? How can I invest now? I'm married with children. I care for, I have a lot of expenses. I did not expect to do this. And the process keeps going on. Before you know it, we're 45 and 55. I wish I could invest now, Osita, but I just can't do it. I have 2 children in college and it's taking a toll out of me keeping them there. And then before you know it, friends, retirement comes up in place. What's happened? We've already worked over 40 years in your life. At age 55 to 65, I know I should be investing now, but money is tight. So this evening, friends, you want to make sure that you don't have the same ways when you're talking to someone that it's too late. You never want to be in a position where it's too late. So it's never too late to take action. And when you look at your financial wellness, friends, I mean, I know we're talking about taxes this evening, and especially the taxing deadline at April 30 and June 15 for self-employed friends. You look at it and see that is only a very small part of our entire financial well-being. Much like when I like to call it the pillars of our wellness, our financial wellness as an individual is more of our personal wellness. See, our personal wellness, friends, have 4 broad categories where spiritual fulfillment, we seek guidance, we seek affirmations, we want to make sure that we serve. Then emotional stability, we want to be emotionally strong to get us through all the challenges we're going to face. Just like if you have to pay back the government, you're going to feel emotionally challenged. So you want to make sure you stay composed. You want to plan. And then physical fitness, you want to look good to make sure we live a great life. You want to stay strong, health. Because what is all of this without having the physical fitness to endure it and to experience it? And then also financial security. We pray, we stay a while, we serve our leader or God, we're emotionally stable, we have physical fitness, but we just don't have enough money to do all the things we want to do. Would that complete our personal wellness? So friends, what I'm sharing with you this evening is just a small part of your total financial wellness, much like financial security is a very small part of your personal wellness. So let's talk about why we pay taxes in Canada, how it started. And in the beginning, taxes was a way of revenue for governments. And it was originally gained at the government. They wanted to tax corporation so that they can be able to maintain the expenses of going to war. And before you know it, before the Confederation, the colonial governments collected taxes, usually through customs duties, and they send them to mother countries like England and France, for example. In Canada, we speak English, we speak French. And we became a nation following Confederation 1867. The new government was given the power to raise money by taxation, and responsibilities were divided between the federal and provincial governments. The most expensive areas of responsibility, such as building railways, roads, bridges, and harbors, became the responsibility of the federal government. So the federal government looks after the main things that talks about everyone coming to the country, whereas the provincial governments assume responsibility for things that generous takes care of us in the province, like education, healthcare, welfare, and so forth. And then there was a war, friends. In 1914, Canada joined the war, and they had to raise money to go to the war. And they started increasing customs and excise taxes. And in 1916, the federal government began collecting corporation taxes. So think of it. If you start collecting a revenue stream and you getting excited by it, would you ever want to stop collecting it? So friends, that is where taxation is the number one profit for any government. So the government needs the revenue to finance war in 1917 as a temporary measure to help finance the war. The government introduced the Income Tax War Act, covering both personal and corporate income. So now it has moved from corporations to personal. And when you look at it, the war ends, they have a lot of debt, they got to continue to spend it. So what happens? Tax became a permanent part of a society. And every time there's a deficit, it is based on taxation to be able to fund it, because that is the number one profit for any society and any government. Which is why, for example, with all the stimulus payments that are being given to family during these difficult times of COVID, that will eventually in the later on affect inflation and also have an effect in families having to pay more taxes in some way, shape, or form. So friends, when you understand taxes here, we all have to pay taxes. We come to Canada, we get a good quality of life, make sure all newcomers are able to adapt, they're going to stay. So think of it this way, friends. We come to Canada. I'm an immigrant. I came to Canada in 2003. When you come, some families come, the government helps you to get transition into the system because they know we have a very low birth rate in Canada. So they depend on immigration policies. Within the next 3 years, they're going to have over 1.3 million people coming through the borders. So what happens? They get us set up for the next 2 years, and we have to go and we will continue to contribute to the economy by working a job, working a profession, and making an income that we will be able to pay taxes. And that is how the revenue stream continues. So as opposed to taxing Canadians higher, eventually immigration will help to offset that by having more people contributing to the labor force. So the contributions you make to their friends through your taxes are essential in helping fund many things, from building roads and bridges to Canada's education and healthcare system, which we are blessed with. From the age 6, we start at elementary school, we go to university, and then we look to go get a career, which talks about paying taxes. So it is a very fundamental part of being a responsible citizen, as well as an obligation to every one of us. And that is where the social insurance number comes into play. The objective of the social insurance number is to administer various government programs. And this is how they identify you across all areas, all professions. So let's look at the different ways you can earn income. And this is called a cash flow quadrant, friends. I mean, if you look at it, it has 4 different broad categories: an employee, self-employed, business, or investor. See, what I want to tell you is that 80% of the population today operates on the left-hand side, which is either an employee or self-employed, whereas 20% operate on the right-hand side as a business or a business part owner or investor. So when you look at it, the left-hand side, they control 20% of the wealth in Canada, which represents 80% of the population. On the right-hand side, they contribute 80% of the wealth in Canada. So if you're looking at this, would you want to be part of the 80% or the 20% of people who are earning? You want to be part of the 20%. So that is why you have to understand how you earn your income. As an employee, you work, you pay your taxes through your paycheck. It's being withheld, your deductions are there. So think of it, if you were able to live off of your gross income, which is your gross annual income, what would your life be like today? Unfortunately, that is not the case. You have to pay deductions, friends, and there's a secret in there. The government is paying themselves first by taking things from taxation, which is why, as individuals, it's important that you start to pay yourself first as well. And I will talk about different ways you can do that by able to save your taxes that you pay. And then self-employed, friends, you work, you have a career now, you work for yourself. You either be a dentist, a doctor, a lawyer, accountant, a CPA, you have your profession that you focused on. Taxation allows you because you're providing a service and you incur a cost to providing that service. And then their businesses, they own a system. They have others working for them. So they create employment. Employees have to pay some taxes and so forth. And they have to pay some deductions as they contribute to the economy, which is why the corporation have a lowest tax rate. And an investor are those who are investing money in the economy. So you can start as an employee and help yourself move through where you can be able to be part of the 80% of the wealth by getting yourself involved in areas where you can invest. So you one day you can have the freedom and the opportunity to achieve your goals and dreams. So let's talk about some income tax brackets and so forth that you can look at. And again, as I mentioned, for further clarification, you always want to talk to your accountant or the person who's guiding you and are licensed to do so in your field. The information that we share here today in Canada, we have a marginal tax rate system. You pay a provincial tax and a federal tax, and then you combine it, it's a marginalized tax. So the higher we earn, the more taxes we pay. So wouldn't it make sense that you understand why that is so you can able to save yourself? So if you look at it in 2019 at a federal level, 0% up to $12,000 in income. See, in 2020, that personal exempt income has increased to $13,229. So at a federal level, you can earn up $13,229 without paying much taxes if that's your only income. And as your income goes up, so does your rates of how you pay the taxes. And that's what the marginalized tax system. And every province is, friends, there are different ways in how you can earn that income in the province. As you can see, Ontario, for example, the ordinary income of 20% of anything under 44,740. So any income that you earn at your job or an interest income, those are considered as ordinary income, which is declared at 20%. And look at capital gains. As an investor, you invest, you make a profit, 10.03%. You have a small business corporation paying dividends, 9.24%. So in a Canadian corporation, friends, you can make a lot of money in being an investor, and taxation works in your best interest as well too. So you want to understand how that works for you. Then you look at 2020 as we go forward here now. You're in the middle of filing. Unfortunately, your preparation would have done in January, end of December, for all the things that you're planning. End of March 1st was your deadline for your Rsp contribution rule. So really, you don't have much ways in how you can save or reduce your taxes now that you can do. So you look at things like your basic personal exempt income. In 2020, you earned $13,299. That helps you to save no taxes. But how can we live on $13,299? You want to be able to live and make more money. So as you earn more money, friends, your age amount now, as you get older, you're able to make more money. So look at it. At the age of 65, you can make an additional $7,634 without having to pay much taxes because you're now older, you're retired, you have pension income and so forth. And then when you have a spouse or common law partner who is not working, you can able to claim their income as a part of your exempt income, which would increase the amount of income to the household and reduce the taxes that you're paying. Then you have eligible dependents. Now, if you're single, you're able to claim for eligible dependents. If you're married, your spouse and you are filing together. Then you have a pension income if you're retiring, a pension income. Adoption expenses, $16,563. Canada caregiver amount, caregiver providing care to someone who's infirm or dependent. They're looking for ways and where they can need support. You're being a compassionate, or being a compassionate person where you live in one of the best countries in the world. You get a credit for that. Providing lifelong savings for someone who have a disability that's certified by CRA, you provide a disability tax credit form to the CRA via your family doctor. Once it's approved, you can qualify for disability tax credit amount. Then your tuition tax credit. You can save some money if you pay at least over $100 in federal tuition. Medical expenses. See, when you look at expenses, friends, and credits, they're mostly issued at the lowest tax bracket, which is about 15% in credit. That goes for medical expenses, and you have donation credits as well too. And then you have things like the home buyer's amount that you can look at. Home buyer's amount that you can qualify for buying your home for the very first time. So there's so many different things that you can utilize. Just you have to be able to understand, take the time to learn it. So let's look at one of the areas where you can save some money, friends. And this is a retirement plan. This is you taking control over it. And this is where a deduction is. And it's just an example of a way that you can utilize and start planning for the year ahead in 2021 of what your income will be like. So you see, registered retirement plan were all promises that were put together in legal legislation. Just like you see bills are being passed and promoted in Parliament and so forth, it's the same way that the Rsp came about. And they have been subject to reforms over the years, and that is why things have changed, which brought about the tax-free savings account as well. So your Rrsp is a way you can help to contribute and save for your retirement. And because you're contributing and saving for your retirement, you're able to claim it as a deduction from your taxes, which will give you back the refund based on your marginal tax rate. So when you look at it, your Rsp contribution to your tax deductible. Deductible means that it enables to reduce your income. So if you're making $60,000 per year, for example, and you contribute $20,000 to your Rsp, your income will not be $60,000 subtract 20 would be $40,000. So you're being taxed at a $40,000 income. And the amount you can contribute every year is based on your notice of assessment. You can find it in your notice of assessment every time you file your taxes. And you normally can claim up to 18% of your own income, or at the end of 2020, $27,230. This number goes up every year, and you can continue to look at your notice of assessment to see your individual amount. And if you're a member of a pension plan, friends, a lot of folks today are benefiting from pension plan, which is awesome. You want to make sure that your pension contributions are considered the same as our Rrsp, because it utilizes the contribution limit that you contribute into your Rsp. So when you look at it, you want to make sure that you utilize a strategy, understand the difference between our Rrsps and tax-free savings account. Our Rsp, registered retirement savings plan, is a tax deduction. So which means whatever you contribute to your Rsp, you can claim it as a deduction. A tax-free savings account, friends, it's funded with after-tax dollars, which means you already pay taxes on it. So the growth of it, you do not pay taxes whenever you make a withdrawal. So if you can afford it, it's a good strategy to contribute as much as you can to both. But if you have to choose one of the other, friends, make sure you understand how they differ and then make a choice based on your own individual financial and tax situation. So let's just talk a little bit about the Rsp concepts and how you can utilize these things to your best interest. Generally, the deadline for Rsp is the first 60 days of the tax year. So for example, in 2021 deadline will be the first 60 days in 2022. And you can make your contributions to qualify for a deduction to your prior year's income, which will be 2021 income. You can make the most of your unused Rsp contribution today, friends. Today, we have over $900 billion of Rsp unused contribution. $900 billion. So friends, at a 30% marginal tax bracket, if every Canadian contribute to their Rrsp, that would represent over $270 billion of tax refunds going to families if they do not owe any money to the government. Wouldn't that be a significant challenge? Wouldn't that be amazing to know that, you know what, you're getting your taxes where you can fund your own retirement? So you can utilize that with your unused Rsp. But one of the things, friends, that's preventing families from doing this is debt. You know, society today, cost of living continues to increase and families are end up in a lot of debts, various debts, mortgage, lines of credit, credit card. So understanding how to manage those and having a plan in place will help you to succeed, because when you look at consumer debts today, it's over $800 billion, just consumer debts, whereas the unused Rsp contribution is $900 billion. So there's a huge correlation, because families are not able to save for their retirement and save their taxes because most of their income is going towards paying off debts. Now, you can contribute to a spousal Rrsp. A spousal Rrsp is where the spouse, who is the higher tax income earner, is contributing to the person who's earning the lower income. So that after 3 years, if the person withdraws it, the spouse with a lower income, their money will be taxed at a lower tax bracket, whereas it was contributed and the credit given at a higher tax bracket. For example, if you make a spousal RSP contribution, your spouse can safely withdraw the funds from their spousal plan and pay the tax on the income as early as January 2023 if you did that by January 1st of 2021. If you contribute in January 2021, your spouse will have to wait until January 2024 before safely withdrawing funds without the attribution rules applying. So you have to get it, you have to plan properly, making sure that you understand your dates and how these programs operate. So when you look at it, you can contribute for the first 60 days to a spouse as well. You basically withdrawals to your younger spouse's age if you have a registered retirement income fund. RSPs at the end of end of the year, you turn 71, you have to convert it into an income, which you can take it out and transfer it to the person with a lower income. So then you can delay your home buyer's plan, for instance. You can contribute up to $35,000 as a person, and you can take that money from your Rrsp to put on the down payment of your first home after you have saved your tax credit. So the home buyer's plan allows you to use Rsp savings to pay for the down payments on a new home. And your repayments begin in 2 years following the year of withdrawal. So if you withdraw in 2021, you start paying back in 2023. So you can delay your withdrawal based on when you take out your money as opposed to earlier in the year or later in the year. Make a required home buyer's repayment plan, friends. See, you have 15 years. If you take out $45,000 from your Rsp as a first-time home buyer, after the second year, you have 15 years to pay back 1/15 of that every year. Because you received a tax deduction in the beginning, you had a receipt for a contribution. If you do not report it as income, it will be taxed as income if you do not recontribute it. So it's important to make sure you understand how this can affect you by seeking the right guidance that you require. And consider sometimes it may make sense to intentionally miss your home buyer's plan because your income is lower. So that's a concept that you can utilize as well based on understanding your information. So as someone who you're working at your career, friends, you have a job, you have your income, you secure, you want to be able to fund your lifestyle, you want to go, you can look at ways you can save money. See, if you have the opportunity for a vehicle that you use for work purposes that's issued by the company, sometimes you have to pay the money that company is giving you because it's a reimbursed cost to you. Sometimes you're taxed on the benefits of having that vehicle. So you want to sometimes find a way how you can return that vehicle so that you don't have to be able to pay all the taxes on it. And you can also reduce the tax deductions at source. You can complete your TD1 forms to make sure that enough taxes are being taken out from your paychecks. See, you can discuss it with the proper persons and your employer. And if you have a refund at the end of the year, instead of waiting at the end of the year for a refund, you can resubmit your form and make sure that your net pay every month will be higher as opposed to waiting for the end of the year where you will get a lump sum of refunds. So let's look at it as a family now, for example. You have a family, you want to talk about income splitting. There are ways where you can use income splitting where you have a pension income. You have retired, you want to be able to do things like that. You make sure you have to contribute to your spousal Rsp, your CPP retirement pensions sharing, you can do things like that. Contribute to your children's Rsp, friends. Maximizing the Canada Education Savings Grant. So when you also retire, you have RIF income or a private pension, like from your workplace or so on, you can split up to 50% of that income with your spouse. Then you can contribute to an Rrsp. It offers important benefits that you should take advantage of before the year ends. Remember, contributions to an Rrsp entitles you to the Canada Education Savings Grant of up to $500 per year, which is 20%. So you pay $2,500, they will give you up to $500 a year as a Canada Education Savings Grant, or $1,000 if there's unused grant room to maximum $7,200 per beneficiary. So you can consider contributing at least $2,500 a year per child to be able to utilize the grants from previous year. You can catch up on that to the children are under the age of 10. So if you haven't started an Rrsp for your growing children, friends, it may never be too late to maximize it. If your children are under the age of 10, you still have the opportunity to maximize your CESG, and your child is over the age of 15, you can consider putting aside $2,000 by the end of the year if they have never had an Rrsp before. So if you have things that you can write off, expenses like incurred expenses like debts and so forth, you can write it off on business property. You can do things like that if it's part of your business. Do you have deductions that will work more if you made it next year? You got to look at your Rsp contributions, your donations, and so on. Are they worth more in the current year, or are they worth more in the previous years? So you have to evaluate which year will result based on your income. So the key element here, friends, is you are the owner of your own business, your own corporation. So think of yourself today as you own your corporation. You work for your business, which is called mine. So Osita Incorporated, that's Osita's business. So you want to hire the right people that's around you to provide the right guidance. Much like every corporation, they have a board of directors to guide them and lead them into the right steps. So you want to be able to do the same thing as well too. And then as you keep to grow, you want to be able to make sure that your directors are valuable to you. So you do not want to say, hey, how can I cut your cost? How can I save money? Because when you start doing that, you got to be questionable the advice that you're getting. Because when you go to a service, let's say you go to the barber and the barber is telling you he's going to charge you $50 for a haircut, but you said, no, I can only pay you $30. That will cover half the haircut. Would you want a half a haircut? So make sure, friends, you have great relationships. And then most importantly, you also have forecasting. Like we're speaking in March of 2021, forecast what your income is going to be like for the year, what your savings are going to be like. How much can you put aside to your Rsp? How much can you put aside to your kids' Rsp? How much taxes are you going to pay? How can you plan ahead? So these are important areas you can use to do that, friends. And then another tip you can use is that you can pay tax deductible childcare expenses to your adult children if they're over the age of 18. It's taxable in their name, and they can babysit for children who are under the age of 16. So consider paying your 18 years old and older children childcare services fee. You can do things like that as well too, legitimately. So friends, there's always a fair way to do it. Make sure you seek the right guidance that you need to do those things. So also, if you change jobs, if you work for a company that's a national company, you can claim your expenses from having to move, from changing residencies. Let's say, for example, you're moving from Alberta to Toronto. You can claim those expenses as moving expenses. So it's important that you clearly document all your expenses and what it takes to do that. So at this stage, friends, I want to just go and do some interaction and make sure that we understand how it's being done and just everything that we've covered to just give you a realistic position. And you can see it visually now, because I always think picture tells 1,000 words, so you can be able to grasp it a lot faster than me just explaining it, especially with this being a foreign topic for everyone. I mean, accountants, CPAs, CJ, I have so much respect for them because of the time that they have taken to get themselves empowered in this field. So I always think you can tap into their knowledge and make sure you get the most out of it. So this time, if you would allow me, I will go and share my page, and I'm going to take a live calculator. Is that okay, Chris?
Sorry, Shiv. Okay. Thank you for that. Tons of questions coming through. So bear with me, folks. I will basically start with the questions right now. All right. So I think the first question came from Tony.
I think he said he wants to show us a calculator, an income tax calculator, and some other things.
Okay, Shiv, do you want me to wait till you show the calculations and then I come to questions? Or?
Yes.
All right, cool. My bad. Sorry.
That's fine. That's fine. Thank you. Okay, so I'm going to be fine. Awesome. So let's look at an example now, friends. Let's say, for example, let's use 2020. You're following now, 2020. This is a single person. You're earning the median household income today. Let's say it was $62,000 in Toronto. So $62,000. That's your income. You have no children. You're single. See, your employment income, that's on your T4, $62,000. And then your amount owing in taxes is $10,784.85. So this would have been taken off in your paycheck over the year. So you look at it, $10,784.85. So you pay this for the entire year, friends. So think of it. if you know this is exciting, are you happy taking home? You're earning $62,000, but if you look at it, your net take home is 62,000 minus 10,784.85, and then you also have to pay for your EI contributions, your CPP contributions, in addition to other benefit plans which you will have at work, like your pension plan, for example. So if you total it, 28.98 and 8, that's 36, about $3,700, plus 10, that's 13. That's about $14,400 you would pay. Now, from a 62,000 income, you're netting about $48,000. So when you forecast, you want to forecast what your net is going to be like. And then from your net, you can utilize Rsp, for example. Or if you have a pension plan at work, let's say you make a $10,000 contribution. See what it does, friends, as a deduction. Your total income was $62,000. You subtract your $10,000. Now your net income is $52,000. So it comes down to your refund now of $2,965. So you just received a $2,965 as a tax refund if you do not owe the government any money. That will come to you as a refund, as a check. Then you can look at it. Let's say it's a single mom, for example, have 2 children. Let's say one is under the age of 6. Look at the difference it makes. See, we understand? The single person would pay $10,784 in taxes. Now that they have a dependent child because they're single, the refund is $2,615 because you're claiming a dependent child. See here? One of them is a dependent, so you're able to make more money. $31,000 for your income, your spouse or your dependent's income, then your CPP EI, your employment amount. So you get a $31,000, $457 becomes your non-refundable tax credits. So you just result in $26,615. And look at the child benefit, friends. These are income tested benefits. It's based on your income. GST, Trillium, child benefits, they're based on your income and the age of your children for the Canada child benefits. So you look at it now, the same $10,000 as a single parent with 2 children. Look at the difference. By saving for your retirement, you have nearly double your tax refund now. And you're adding almost $2,000, which represents nearly $150, $160 a month more of income coming into your household. And the estimated GST credit now you're getting because your income now has gone under the threshold. So these are things you want to be able to get the guidance and plan properly so you can go forward. And friends, when you're planning, you want to be able to have someone who's educating you and they're providing that information to you so you can make an intelligent and wise decision for yourself. And you can look at a family, let's say each are making $62,000. Let's say they have no children, they started working. One on 62, the other one 85. Look at the difference here. This family paying one income 77, they don't have any Rsp. Take this out. So this is your employment income, and that's your gross, and this is your take home. Your taxes at the end of the year is $10,671.85, which you would have already paid through your workplace. $18,056.15. You would have already paid that. So friends, that's the taxes from that one household of $28,000, almost $29,000 that you're leaving in taxes. Now, how comfortable are you knowing that you're leaving nearly $2,500 a month in taxes? And this is where I talk about, friends, because families don't understand how they can utilize it and how it's in their benefits. It's hard for them to capitalize on it. And look what happens now. You put aside $10,000 Rsp instead for the higher income earner. It brings the income from 85 to 75 now. Look how much, $3,000 in refund. Do it back again with children now. Let's say they have kids. Look at how much further it impacts you. They have 2 children, 2 and both are under the age of 6. So new family, see? Mom gets a refund of $112. The child benefit is $43.90 because of the household income bracket. Then now you go back up, you do $10,000 to the 85,000 income earner. You do $10,000. Look at the difference, friends. So does it make sense for you to take the time to learn this information? How would it impact you financially? So now you're thinking, okay, Shiv, it's awesome that you shared with me how these things work, but where am I going to find $10,000 at the end of the year when I have to pay all my bills and I got to live my expenses? What am I going to do with that? How am I going to get that done? And I totally understand you, friends. I come across on a daily basis. So I'm going to share with you a concept that you can utilize, the concept of leveraging. And with good planning and forecasting, you can be able to succeed financially. So I'm going to share with you a concept called Rsp Loans. I hope you've heard of it before, but this is what it can do for you financially. So let me put my screen up here. Okay. Chris, I'm not getting my whiteboard.
You're not getting a whiteboard, sorry?
Yeah, my whiteboard. I'm not getting the whiteboard to share.
That's weird.
Let's see.
Is it good now?
And it's telling me.
It's weird.
No, it's not allowing me. It's giving me iPhone or iPad.
No.
Okay.
Oh, I think
excuse me, he wants to use the whiteboard?
Yeah, I
Yeah.
wanted to use it on my whiteboard.
Okay, let's see if we
It could be a settings in the security settings.
yeah.
Okay.
It was disabled. So
Okay. You enabled it.
yeah, it can proceed, right? While we try to see if we can enable it now, okay?
Okay, thank you. Okay. Friends, I know we get some comments here. I'm working magic. I'm not a magician. my jacket may look like a magician, but I'm not. I wish maybe COVID had been good. I grew some hair because you saw the picture. I did not have any hair, but now I've been able to take the time to grow some hair more. I mean, I chose to cut it off before, but now I'm enjoying it. Maybe now I should become a magician. No. Okay, yeah, I get that there. Okay, so let me pull it up. You want me to use my slide and type it out instead?
Yeah. Do you want to try now again? I think someone.
Can you try now?
It's saying phone or iPad. Is there like a phone or
This is
iPad
weird.
that's connected to?
No, it's not connected to any phone or iPad.
No, it's not. I've enabled annotation as well.
Yeah.
Let me see here. I'll try again.
Or you want to use Notepad?
Yeah, if you want to use
Yeah.
Notepad.
Yeah, you can use
Yeah,
the
okay.
Notepad. Yeah.
Okay, I can use that. Okay.
Okay, can you try the whiteboard again?
No, it's still giving me.
It's still giving him that.
Yeah. Settings. Let me see if I could delete something on my screen. It's my fault. No, it says like an iPhone or an iPad is connected. I have to connect an iPad or iPhone.
No,
For you to use that now.
no, that's
Yeah.
not.
Okay. I can just put my slide up, Christian.
Yeah.
Type it out,
So
type it
please, I think because I'm
Yeah,
trying
yeah.
to see why it's giving me. It's not. I don't know why.
Yeah.
For some
Yeah,
reason, it's
That's
just
fine.
acting.
No problem. Thanks for your patience, everyone.
Thanks.
No
So-
problem. No problem. Shiv, can you try one more time? Just one more time, please.
No.
Stays the same?
It's still, yeah, iPhone or iPad.
Oh, okay.
Connected.
Okay.
That's fine. It's okay. Thank you. Thanks for your patience, everyone. So let's look at it. For example, we talk about Rsp loans. So when you look at an Rsp loan, this is what you look at. So you look at your income that you're earning. So if you're earning $65,000 a year income, So 65,000 is your income. And your tax bracket, let's just say 30%. 30% marginal tax rate. So you now have, let's say, a lot of Rsp contributions from that you've never used before. And you're also paying off some credit cards. So let's say you have $5,000 in credit card debt. Let's say interest rate, 18%. So you're paying $5,000 credit card debt at 18%. Now your monthly payment, right, for that is about 100, and let's say $60 a month you're paying minimum payment on a monthly basis. Now, how comfortable are you paying $5,000 to credit card debt? And it's revolving debt, which means the interest is calculated daily. So 365 days of the year, you're paying more interest upon it. So now what you can do, friends, at 30% tax bracket, you can contribute, let's say, $15,000 to your Rrsp by taking a loan. So you're taking a Rsp loan. And this is a fixed loan. So you have a 10 years amortization, for example, or the program that you have. And then you make sure you look at it now on a monthly basis. This will cost you about $160 in monthly payment to repay that $15,000 in 10 years. At the same time, when you file your taxes, you will get a $15,000 receipt to show you can deduct. So it's a contribution for contributions, which will give you a refund of, now you're getting back about $5,000, $3,000, $5,000 at a 30% tax bracket. So let's repeat this, friends. You're earning $65,000 a year, for example. Your marginal tax rate about 30%. You have $5,000 of credit card debt. You're paying 18% at $160. $15,000 of Rsp loan you can take. You can apply for a loan as an Rsp, just the same way that you would apply for any other loan. You'd apply for it, and you'll be able to pay it back $160 a month. Let's say if you do it amortized over 10 years. When you submit your taxes at the end of the year, you will show a receipt for $15,000 of Rsp contribution, which will now give you a refund of approximately $5,000 at a 30% marginal tax rate, which you can take that refund now of $5,000 that you're getting back as a refund and pay off your credit card. So now you don't have no credit card debt. You have $160 that was paying towards someone else on a credit card. Now you can take that same money and pay back your loan. So without any new money, just by rearranging, reposition the way you're spending your money, friends, you can help yourself to be debt free, and also you can utilize the $15,000 of Rsp loan eventually as a first-time home buyers. So it's a win-win position. You're able to pay off your debts, you have money for your retirement, and also you're paying yourself while you can come up with your down payment. So with that being said, friends, I'm so grateful for the opportunity to speak with you this evening. I would encourage you, we have a team website, just to do a quick assessment of everything that you've talked about this evening. And you feel free to give me a call and message me regarding the assessment. It's our team website, so you can always reach out to myself directly after you've done an assessment. We do not track any information on there. It's just for you to get a knowledge of where you are as a newcomer. It's important for you to be able to have an awareness. If you're living in Canada for a while and you need to know directions of things that you must do, it'll be an awesome assessment for you to do. So feel free to message me, give me a call if you have questions based on the assessment, because it will ask you some thought-provoking questions that covers all areas of financial life, that if you follow the instructions, it will also tell you at the bottom what you can potentially do to get better, and we can help you to assist you in those programs. So with that being said, friends, again, I'm so grateful to Chris, to Osita for putting us into this program. I mean, I know my friends at Temi, she's been so grateful to my life, and she told me I have to get used to the English, and I'm so looking forward to it with all my friends here. So thank you so much, Buki, for reaching out. Thank you, Jamuki, and thank you, Viola, for helping and assisting. I'm grateful. I hope you had a great time with us this evening. So I'll turn it back over to you now, Chris.
Chris,
Oh, you're on mute, Chris.
Chris,
I'm not mute. My headset was up. Sorry. I said I'm speechless. Like I'm overwhelmed. I'm still trying to get used to how we're going to proceed because there are tons of questions. There are tons of questions. So folks, trust me, I'm going to get to everyone's questions. So let me first start. I do have one question that came from Twin. I think it was the first question. She dived into IRPS, and she asked, is this a great? Yeah, IRP is great as well. That's what she was asking. Are they a great idea? IRPs.
1 second. I think she's in the States. 1 second.
So
One
we
second.
don't do IRPs in Canada?
No.
All right.
No. All right.
All right.
Unless
Okay.
she's
So
referring to
Tony,
individual,
I
unless
guess
she's
so.
talking
I
about
think it's
individual retirement plan. Yeah.
Yeah.
That's an
So
Rsp. Yeah. Right.
yeah. So that's not, we don't do that in Canada.
Yeah, your individual retirement plan would be like your Rrsp, your tax-free savings account. Those are your
The
individual.
same. And as you pointed out, I mean, it's a great idea. So
Yeah.
okay. So next question. Olawale asked, I'm an employee and I also have a sole proprietor business opened in 2020. I made no profit for the sole proprietor business. Question is, will there be any tax implications for the business?
Well, when you're sole proprietor, it consider both your employee income and your sole proprietor income. They're both reported on the same form in terms of your overall T1 general. But you complete something called T2125 of your statement of your business income. And based on the profits or loss that you carry there, you can able to claim that on your business income. So if you carry a profit, then it's taxable. If you carry a loss, it is not taxable. You don't pay the tax on it because you didn't make any profit.
Okay. So folks, if you still need more, breakdown on this, as Shiv has said, reach out to Shiv. I think his information is there on our invitation and he's on LinkedIn. So please reach out. I think the next question coming from Ikemefuna. I mean, I think he was asking whether please share this source data for tax indication bracket. Is that something you would be willing to?
No, I wouldn't be able to share the tax estimator. That's a waste of my licenses. You can do that. You can do that. You can do that on the CRA website, or you can go on the CRA website, and they have tax estimators on there. You can forecast how much income and so forth. They have great tools in the website.
Cool. All right, Kimifuna, I hope that answers your question. Joy asks, what does this statement inside your slide mean? Interest will not be deductible if you borrow capital to contribute. However, TFSA contributions can be recouped next year.
Yeah. So, yeah, TFSA. If you do not contribute to your TFSA this year, you can carry forward that to a future year. Unused contributions can be carried forward. You can always catch up on it. And also, if you make a withdrawal from your TFSA this year, you can recontribute it back after.
All right. Question here from John. Is premium paid on life insurance taxable?
Yes. So if your employer is paying for the premium on your life insurance, they will put it on you as a taxable income to you on your T4.
All right. Hope that answers your question, John. Talking about spousal, I think this question is coming from Apopola. Talking about spousal Rrsp contribution, my understanding is that such contribution is applied to contribution room of the spouse making the contribution. Is this correct?
That is correct. That is correct, Apopola. Correct.
All right, cool. Funke is asking, if you contribute to Rsp for the children, should it be included in the family income tax assessment?
No, it will not be. This is a separate program.
All right.
Contributions to an Rrsp they're not tax deductible. You just get the grants of 20% based on your overall income. And if your incomes are lower, you may get the additional grants.
Cool. From Prof. Jegzi, can an unemployed person open an Rrsp account? How does this affect taxation? Is that
Great
doable?
Question. Yes, an unemployed person can open an Rsp account, but I mean, the objective of having an Rsp is to save your taxes while you have a retirement. So your contribution room to your Rsp is based on your past employment income. So if you have not worked you're not going to have much contribution room to contribute to RSP. And then you do not want to take out money from your RSP if you're unemployed and have to pay withholding taxes. In that case, a tax-free savings account would be in your best interest.
Okay, Prof, I hope that answers your question. Another question coming from Joy. What does interest incur to earn income from a property tax deductible against, what does interest incurred to earn income from a property tax deductible against income?
Yeah, so Joy is referring to what does interest incurred to earn income from a property is tax deductible against income. Yes, because that's you're using that as a way of earning that income. So it's like being a renter. You're renting your home. You're able to claim your mortgage interest on your home, which is the interest you're paying to own that home. So it offsets it. Yes.
How does that happen? Sorry, I just have to jump in. How do I manage that? Like where and what? Is it when I'm filing my taxes or what? How does it work?
Yeah, so you need to get an accountant to help you set up the papers in terms of how you're borrowing the loan and so forth. So I would advise you my recommendation would be to speak to someone who will guide you in terms of the loan, where the money is coming from to begin with. So then you will know what the purpose of that loan is, because you can't just take out any loan and just do it. So get the proper guidance. And then once you're using it and you're able to get the refunds from it, or you make a profit or a loss, you can able to deduct the interest you're paying on your taxes. When it comes to renting your home, yes, you can claim your mortgage interest on your taxes. But again, everyone's position is different. So the questions here are generalized. You want to make sure how it applies to you directly. You have your team of folks who are working with you to give you the right guidance and advice.
All right. Chinedu, is this a question or is this just
No, that's Ebony. I think she answered it. She was answering it.
Okay. All right. Okay, so let's move on to Ranty. Ranty asks, does the TFA also get you tax credits like the Rrsp?
Yes, so that's which one? Chinedu?
Oh, okay, sorry, Chinedu's question. All right, a school of thought post-its that when one gets a refund, you're basically leaving money on the table. As this refund is being held by the government for 1 year without bearing interest, how can one grow this potential refund and turn it into an investment instrument?
That's a great question, Chinedu, because as I mentioned before, you can complete your TD1 Ontario form or your TD1 federal forms to make sure that instead of waiting for the end of the year to receive your refund, you can get it in a paycheck. You can just make sure you report the right to your information to your HR department, and then they will take out the amount of taxes. So instead of waiting for $3,000 at the end of the year, for example, you'll be able to get that money monthly. Let's say, and when you get it monthly now, you can take that $250 and you can put it into an Rsp or tax-free savings account every month as opposed to waiting at the end of the year.
Nice. Okay. So Ranty asks, does the TFSA also get tax credits like the RRSP?
No, Ranty, it does not. The Rsp is tax deductible. The TFSA is not, because you were already taxed on the money.
So the Choma, I think Shiv, you pointed out that the estimator calculator can be found on the CRA website, right?
Yes, you can do that on the website.
All right, cool. Kenneth is asking, can I withdraw my RRSP anytime I want after contributing? Or is there a deadline?
Yes, absolutely, Kenneth. I mean, your RSP is your self-directed plan, so you can take it out anytime you want to access it. Depends on where you invest it. Depends on the investment vehicles that you have it in. Unless there's a contract that you can't take it out, then that's the only time. But you can take out your money from your RSP anytime. Keep in mind that when you take it back out, it will be considered as income, which have to be reported on your filing. You receive a T4 RRSP. So you have to make sure the objective of RSP is to contribute when your tax bracket, when you're paying more taxes, and withdraw when you're paying lower taxes.
Less taxes.
Yes.
Cool. John asked, can someone who entered Canada as a new immigrant in January this year file tax? I don't think so.
No.
Well, next year. It'll be next year. All right, cool.
But she didn't answer that, so.
Okay,
Yeah,
Chinedu
Chinedu's been
answer.
doing a great job. That's
Oh,
Joy. Chinedu.
Chinedu, yeah, okay. All right. So I think Funke asks, as a student, in addition to tuition fees, should cost of textbooks be included for taxation?
That's a great question. Your institution that you attend, they will give you a T2202 form for your tuition tax credits, which is what you report for your taxes. You cannot claim your individual textbook amounts and so on. You have to get your right form. The institutions normally issue that to you. So it's a tax slip. You can get it from the
Okay.
financial accounts website.
All right. Obiora, how do you get qualified to have access to the Rrsp loan?
That's a great question, Bill. You just have to go and apply for it at a financial institution. We do it through different companies. You can go to the bank, wherever. Rsp Loans, we do through B2B bank. So you can work with different lenders and able to give you. It's the same way as you would apply for any loans. You just have to submit an application and specifically mention that you're looking for an Rsp loan, and then they will tell you what you qualify for.
Cool. Joy, so I hope you got that as well, because Joy asked the same question as well.
Yes.
You need to have money or a balance in your Rrsp first to get this loan. If you okay.
Great question, Joy. I think, are you referring to when you're taking out money from your Rsp account, or when you're taking out an Rsp loan to put into your Rsp account?
Taking an Rsp loan to put into your Rsp account.
Yeah, so when you do that, Joy, it's underwritten just like you're applying for a credit, like you're borrowing a loan, you're borrowing some money. So you'd have to show some income, and some places there's no proof of income or proof of assets. They go by a credit score based on the amount of loan that you're applying for. So once you do that, you must have the contribution limit to put that money into your Rsp. So you do not have to get money into your Rsp. It could be the first time you're doing it to put money into your Rsp, which you can borrow from the loan.
Okay, thank you.
Welcome.
Okay, so I think the next question here from Remy is the 2005 Rsp contribution per child to be able to benefit from full CESG?
Which one are you?
I'm looking at Remy. Remy for 853. Remy asked the question.
I think we have one here from Abdul Baki.
Yeah.
Can a first-time home buyer apply for the Rsp loan and withdraw it alongside your Rsp contribution to make down payment? Absolutely, you can. Your contribution has to be in the account. Your contribution has to be in the account for 90 days, which is 89 days. Under the 90th day, you can withdraw it as a first-time home buyer. So you can take it. Let's say, for example, you put money into your Rsp. Today is March 11th. You count 89 days after, and on the 90th day, you can withdraw it back to use as a first-time down payment in your home.
Okay. All right. So I think the next question then goes to Remy. And that's is the 2005 Rsp contribution per child to be able to benefit from the full CESG?
That is correct, Remy. Yes, you put in $2,500 and you get a 20% grant of $500, so you get $3,000 now.
Okay, cool. Adeola, so Adeolua asked, okay, I think he's still, so the IRP is the insured retirement plan. Is that what you were referring to when you?
No, the insured
retirement plan.
Yeah, okay. Yeah, if they're doing it in an insurance policy, then yes, they can do that through an insurance policy, but they have to discuss that with their representative that's doing that for them.
Okay.
Yeah.
Sorry, Chris. I think there's a question from Bumi. Is there a benefit for couples to file separately?
Oh yeah, sorry, first one.
Well, when you're doing it, you basically when you're filing your returns, you have to complete this as a family, as a household income. So it's based on every person together, and then you individually have to then submit your return. So you're preparing it together, and then you individually submit it.
All right. I think there's Jumoke asked this question. Many of us in IT are grateful for working from home and working multiple jobs and contracts, our incomes could skyrocket this year. What else is available to save on taxes outside Rrsp? How can we maximize taxes to be paid? Can we speak to tax savings on real estate investments?
Yeah, so basically, when you look at it in you're working your jobs and your contracts, those are, if your employer as a job, they give you declarations of employment and they tell you your form what expenses you're able to claim. Then you can claim those on your form, and the government's allowing you to claim 400 at a flat rate, or you can claim the deductions of everything else that you want to claim. So you can do that. Your contracts, if you're in a contract, again, it depends on, are you contracted as being paid based as a contractor, or are you just being on a contract position? So there's a big difference you have to verify there. And again, how does your employer treat work from home expenses? So you'd have to take it up with your HR department to figure out what allowances you would have, and then they will provide you with the right documentation. But let's just be able to save on taxes. So.
All right. Okay. So from which account can you save your deposit to buy a home or max taxations? TFSA or Rrsp?
Rsp, because in the beginning you would contribute, you will get a refund, which would maximize your dollars. So if you put in, let's say, $15,000 into your Rsp, let's say a 30% tax bracket, you get back with, let's say, $5,000. So you're now 15,000, 15 plus 5, so that's $20,000 you now have.
Okay, I think some folks are even answering and actually suggesting what you did, Rrsp as well. So thanks, Apopola. So what are tuition credits and how do they work? This is coming from Omar Fume.
Yeah, attribution credits basically is stipulates a timeline. So the government have rules, and if you do not follow those rules, then it does not get qualified for those. So that's what the attribution rules are. It's stated guidelines, like for example, spousal Rrsp. When you take it out, and when, let's say, for example, you contribute to spousal Rrsp in 2021 now, and you would take it out, you have to make sure that you're doing it within the timeline. So if you do not wait for the 3 years, you'll be taxed in a person with a higher income bracket.
Okay. Ebony CC asked, is it advisable that when you are a high income earner, you rather maximize your Rrsp?
It's not a question. It's not a question, it's a comment.
Okay. Oh, sorry. Didn't realize that. Okay, so where's the next question? All right. So as a newcomer, is tax deducted for the money transferred into our checking account from exchanges? This is coming from Ade Bukola.
No, that's wired money you will receive, but again, you have to track with your institution and the source of that money and so forth, and that will determine it. So I would say seek guidance on that.
Okay. All right. Another question I see here: can someone who got into Canada in September but didn't work till this year pay tax for 2020? I don't think so.
No, if you weren't working, you're not paying tax.
No, you're not.
Apopola answering.
So Apopola is actually answering this. Okay. Gloria asked, if I get up to half of my rent or as rent assist, will I still be able to claim some on rent?
Yeah. Whatever you're paying, yeah.
Whatever you're paying?
Yeah, what you're paying, your personal amount.
Okay. What are your thoughts?
Question again, please. I didn't hear the question. Sorry. I'm so sorry.
It's on the chat. If I get up to half of my rent as rent assist, will I still be able to claim some of that rent? And Shiv said, yes, you will.
Not the rent assist, not the portion that's being assisted, just the portion that you're paying.
All right. What are your thoughts on taking student loans versus making withdrawals from Rrsp contributions for graduate education?
Yeah, so as an Rsp, you can do a lifelong learning plan for $20,000. You can take $10,000 over 2 years. So again, it goes back to your personal financial situation. Investing in your Rsp and your education, your education is designed to make you grow more knowledge. So you want to get a higher paying job in the future. So you can always take an Rsp loan if you want RSP from your lifelong loan plan. But if you also qualify for a student loan like OSAPs and so forth, you may be eligible for a lot of great grants that they may qualify for based on your income. So I would say it would be a specific scenario. You have to look at what your incomes are and which is in your best interest again.
Okay. Oluwadamilare asked, do I have a RRSP account automatically when I start my first job? Can't see it attached on my payslip.
No, you don't get RSP automatically. You got a CPP, Canada Pension Plan.
If you get trained by a registered organization, can you claim the cost of training for taxation?
Yeah, if they're giving you the T2202.
All right. So, but they will need to follow up with the registered organization, am I right? Or how? Okay.
Yeah, the organization will be able to provide them that details.
All right. What are the Obior has asked? What are the conditions around the FNA life coaching?
It's just complimentary. Yeah, that's the link. Obior, check the link that I shared with him. Those are coaching that we provide. It's complimentary. We make some recommendations for you, and based on the services we recommend, if you're satisfied, you're comfortable in utilizing those programs, we'll work with you and continue to educate you, follow up with you, and plan for you. And most importantly, we work based on word of mouth referrals, so you're able to share that information.
Cool.
So there's no more. You do not have to pay a monetary fee for that consultation.
All right. Funke asked here: is there any limit on the number of membership fees that can be claimed?
No, if it's legitimately to your business and so forth, you can claim it.
Okay. All right. I recently started, who's this question from? Sam Balogun. Yeah, okay. I recently started working as an independent contractor, but I have an incorporated business. Do you advise I merge all into the incorporation and file single taxes, or keep them separate?
Well, you still, again, you'd have to seek guidance from the person who completes your corporation taxes to see which in your best interest. Sole proprietor, corporation, two different types of organization. So I would say speak to the person who is doing the books for the corporation and let them advise you in terms of which will be better savings for you.
But did you answer this question of the RSSP withdrawal?
No, it's RSP withdrawal for down payment only applicable for first-time home buyers. Yeah, so it is applicable to first-time home buyers, and the definition of first-time home buyers is that you must not have lived in a home that you own within the last 5 years. So if you had used the RSP first-time home buyers in the past, you can still apply for it if you do not owe any money in the home buyers plan, and if you have not lived in a home that you own within the last 5 years. Yeah. But not to purchase, if you're living in a home already, you wouldn't be able to qualify for it.
All right.
Okay, Ebony has already answered.
Yeah, Ebony has already answered that. I think also Apopola also answered Choma's question here.
Yeah.
So I think the next question from Prof. Jegs is OSAP grant considered as a taxable income?
You don't pay for taxes on it because it has to be reported, but it's not taxable in terms of you don't pay the taxes on the grant that you receive. It's reported on a T4A for them. It's like a scholarship. It's like a scholarship, so you do not pay the tax on it.
All right. Here's from an iPhone. If you have two high-paying full-time employments, how do you maximize your deductions to ensure you're paying minimum taxes?
That'd be amazing. You want to be able to do maximum and get minimum, right? It's a privilege to pay taxes. We get a lot of great benefits. So you can utilize things like the Rsp, utilize those things if you make donations. But again, donations are not deductions. Deductions are specifically Rsp, childcare expenses. Those are things that are expenses that you can deduct.
Okay, Funke asks, if your tuition fees are in USDs during taxation, how will Canadian equivalent be calculated?
Well, again, you don't get your T2202, so you're a foreign institution. You wouldn't get the federal credits over here.
Yeah.
Thank you, Chris. It's been an awesome night so far. Thank you so much for everyone for participating. This was amazing.
Absolutely.
I look forward to
You missed the question.
Which
I'm
one?
sorry? Which question?
How do charitable donations impact my taxes?
Somebody answered the question there. He said they reduces your taxes.
Yeah, it helps you to offset about 15% of the donation that you make. It helps you to give you as a tax credit. So it helps you to save the taxes that you've already paid.
Oh, okay. Sorry. Thank you.
Yes.
Sorry, can I ask a question to him? Like, is it wise to save money on Rrsp in the bid to buying a home?
Sorry, if it's wise to save it in an Rsp if you want to buy a home?
Yeah.
Yeah, it depends on conditions again and the individual. Every individual is vary. You may have a self-employed person that able to claim some deductions that doesn't pay a lot of taxes, or you may have someone who have a high income earner. So you have to really look at your environment, and that's where the planning aspect comes in and educating you. So these are all general concepts we talk about. If a person who's self-employed have a lot of deductions, then they may not need to put money into Rsp. So they wouldn't be able to use that for the first-time home buyers because they're saving taxes. If a person who's working a job is paying a lot of taxes, then they can able to claim it because they pay a high amount of taxes. So every money they put into the Rsp will give them the refund, which they can use as additional money to purchase their home.
Okay.
Well, Chris, thank you so much. It's 9:18. I appreciate being with everyone this evening. Very informative. Very, very good feedback. I appreciate all the questions and interactions, and everyone is still here at 9:18, and I know they're tuned in from all over the country. So thank you so much for having me in this forum. I really appreciate it. I look forward to hearing from you, and if you have any questions, I'll be happy to take them. And again, based on what I've shared with you this evening, was educational and based on the information that already exists out there. I'll also refer you to the CRA website. They have a lot of great information, and also just put together your mentorship team, the people who you want to be your personal board of directors to guide you in your financial affairs. So thank you so much, Chris. Thank you so much, Osito. Thank you so much, Abiola. Thank you so much, Jumuki, for everything that you've done. And I'm so grateful Buki reached out. Thank you, Buki, and everyone else. I really appreciate you being on this evening.
Yes, and we do appreciate you, Shiv. What you've done tonight is great. Trust me. When it comes to tax, it's something that the information can never be too much, right? Information can never be too much. Every one of us always look forward to information when it comes to tax, especially this is tax season, right? So obviously we are very excited and we're very happy tonight. Engaging with you, sharing with you, and also learning from you as well. I know there are so many questions. Trust me, there are so many that a lot of folks still want to ask a lot of questions. So Chris, I don't know, is there where you probably want to collect the additional questions? Maybe we'll see how we can reach out to Shiv after now. And, Shiv might be able to help us as well to respond to some of those questions after this time. Is it possible?
Definitely. Shiv, it's up to you, really. We know we've had that conversation where we were like wanted to keep to the timeline and whatnot. It's informative, right? That folks here are really getting knowledge that I can't even share, right? So trust me, folks online, look, I know everybody has questions, and Shiv has left his shared his digits. There's no harm in reaching out. I'm going to reach out to Shiv if you don't know. So just for some guidance. So I would advise that folks, you could ask your questions here, but please reach out. Nothing is beyond, there's no knowledge any knowledge we are gaining right now, we share with the next person coming in, and it moves on from there. We are building an ecosystem here. So folks, if you have any questions, I would advise shoot the questions out, but please also take advantage of reaching out to Shiv. He's opened his doors. He's asked us to reach out. We've accepted him as a family right now. So hey, reach out if you need to, right? There's no harm at all.
Fantastic.
Can you please help us get the screenshot or maybe a photograph of that contact card he shared, the one that showed the link or something, so we can, maybe if that could be shared on NIPCA, so we could use the link and the contact to reach out to him later. Thank you.
Yeah.
Thank you so much.
All right. It'll be
that's
done. No problem.
that's fine. That will be done. So thank you very much, Shiv, once again. Quite appreciate.
Thank
We are
you.
very happy, to have you, and what you've shared with us has been quite insightful. Thank you so very much. Over to you,
Thank you so much,
Jumoke.
everyone.
Thank you so much, Shiv. It was a very insightful one, and I'm sure everyone here has learned a thing or two. I'd like to call on Bukola now to give the vote of thanks. Is Buki online?
My
I don't
bookie.
think Buka.
Or you will probably maybe you have to refer to her as Ebony Sisi. Then she will.
Oh. Yeah,
Yeah.
no, that's
Because
much
there
easier.
could be so many
There's confusion.
so many bookies, right?
Exactly,
But
exactly.
there is only one only Ebony Sisi. So yeah.
Yeah,
Okay.
no. Thank you so much, Chief. It was a wonderful session, and I think what amazed me was the speed at which you agreed to come through to us. You were not the first person that I approached, by the way, so thank you so much for agreeing to do this. The community appreciates it. So on behalf of everyone here, we say thank you, and I'm sure, like Chris said, people will be reaching out to you, and this will be the beginning of a wonderful relationship between yourself and NIPCA members. Thank you so much.
Thank you so much, Buki. Appreciate it. Everyone needs to see. Thank you.
All right. Nice one. All right. Thank you so much, Shiv, and thank you so very much, and have a good night.